It's a real circular sort of thing, and you're like, oh, I don't really see any exit point here.
Does it get overwhelming doing a $40 million transaction?
I still just lie at night, just going, gee, I hope this goes through.
Everyone's talking about trust lending in terms of residential space.
There's so much opportunity out there.
What does that commercial space look like? How did you get into it? And where are we now?
You can see like live up to date from satellites, what's happening in the area, what's happening on your particular property.
How do you know the strength of the lease and the tenant that's holding the lease?
The resi market I look at every day and I just go, wow, that's so hot.
Do you really want to be a landlord to 4 other properties? Maybe not.
Critical, that's all the value.
Would you be focusing on residential property or commercial property?
Yeah, wow, you've bamboozled me.
Good. Welcome back to another episode of That Backyard Property Pod. As always, I am super excited. Today, we have a valuer, we have an expert in the Perth commercial market, and an all-round legend, Lachlan Andrew. Welcome.
Thanks, Michael. Good to be here.
It's so good. This is the first time I've had a father and then a son guest, which is pretty cool.
Yeah, I was thinking about that. I actually haven't watched that one yet, but it's good to follow in the footsteps.
I'm sure this one will do a little bit better. We'll wait and see. I can't wait to go into everything around the commercial space. We talk so much about the residential market. The commercial market feels a little untapped in terms of knowledge and information. So I can't wait to go into that. But I'd love to start off with what a home means to you, especially growing up in Perth. What does home mean? Home's
where the family is, I think. Wherever the family is, that's where it is. It's not a physical fixed address. So wherever they are, they're generally near the beach, adventuring off somewhere, like doing those kind of things. So yeah, it moves around.
You probably have quite fond memories of childhood, I'm assuming, when you've got 2 brothers as well and you're running amok.
Absolutely, yeah. Having 2 brothers really close in age, definitely I'm so lucky to have my best mates. Like, they're my 2 brothers.
Yeah.
And yeah, we're so close, all the same interests.
It's quite fascinating because I know the 3 of you and you were all really, really driven. And you've all got a really hard work ethic, driven and enthusiastic about whatever pursuit you're trying to tackle. Do you think that was bred into you, or do you think that it's just innate?
I think it's just something that's developed through growing up in our family. Yeah, really sort of like value creation driven family. Through my parents, mum and dad, that's always what they've focused on doing. And I think that's just rubbed off on us. And as a consequence of that, you know, we've probably just ended up motivated and keen to do our own thing, keen to kind of make our own way through the world. And really just like, it's just ingrained in my brain. If you're not adding value, then what are you doing?
It's a really good point. Is there any like key memories or core memories around that as a child or growing up around adding value? Like, was there any key moment where you said you're pulled up because you weren't adding value?
Oh, mate, all the time.
Yeah.
Like, genuinely, all the time. Certainly often bumped back on track, you know, within the learning journey. I think some of the key moments were like going to work with dad or going to dad's business on the weekends and like helping set up a new office as a kid, and experiencing that. And you go, oh, this is so cool. It started off with 1 person, then it was 10 people. The next office was 20 people, and then 30, 40. Each time as a kid, putting the cables in behind the computers, more and more computers coming on.
It's funny you mention that. My grandpa ran a really successful food wholesale business in Darwin, and my parents managed that for a number of years. It's always been within the family. And I remember as a kid exactly the same thing. On the weekends, you'd go in, you'd be stacking the shelves, you'd be putting things away, you'd be setting up computers, you'd be doing all of that sort of stuff. And you're really in the hustle and bustle of a small business that's growing.
Yeah, it's cool.
And then you're looking and going, there's employees and then there's business owners. And right from an early age, I certainly felt it where you're going, well, these people clock on and off, and then this type of person is always around and always having to manage stuff.
Yeah, yeah.
And I guess that's probably similar to yours.
Yeah, definitely the same journey. Like watching mum and dad do that, just stress for 20 years. And not only looking after our family, but looking after the families that they employ as well, like particularly during COVID. I think the first thing that Dad stressed about was, how am I going to keep the doors open for these people that we employ? And just going, it's just like, it just gets sort of pressed into you. It's more about the other people than it is about you.
So putting them first.
Yeah.
Let's go into the commercial market. I'm so fascinated by it, and today is really a journey of curiosity for me as well, because I feel that being an expert in resi, it doesn't correlate to commercial necessarily, and not everyone's an expert in commercial as well, and that's why I got you in here. So take me through it. You work for CBRE. What does that commercial space look like? How did you get into it, and where are we now?
Yeah, well, my journey began sort of 2 different careers ago. At KPMG, I started out, I was still at uni, super green, and I started in building consultancy and just general real estate advisory. And that was like doing condition reports, learning about structure and fabric of buildings, learning about services, hydraulics, all of that kind of thing. And that was kind of like the basis for where I started out, and what I understood was, what actually is a building. And from there I kind of thought, this isn't really where I want to be. I always wanted to do my valuation license, which takes a couple of years of practice, a little bit like doing your chartered accountancy, but for property. And then I think I was always wanted to be on the selling and leasing side of things. So that was ultimately where I wanted to end up. But I've always found myself in commercial property, and now it's sort of, I went through that journey of being a valuer, which was 3 or 4 years worth of work, always doing industrial, commercial, small retail shops, really just learning. And now it's into the selling and leasing side of things. It's really like a very broad range of properties. We don't really, I sit in the Metro Investments team. It's kind of Australia-wide. It's retail, childcares, fast food, development sites for land subdivisions or mixed-use sites.
All based in Perth Metro?
Yeah, all based, well, WA really.
Yeah.
And then bits and pieces across the borders and that kind of thing. One of the benefits of working with CBRE is you can kind of connect in anywhere. So I'm quite lucky in that aspect. Just helped facilitate a deal in Texas for like a Pilates studio, which is pretty niche.
How did that happen?
Well, it's a Perth group.
Yeah.
Looking to go into the US, and it's your endless connection.
It's amazing. When you're talking me through that, the classic skill stacking comes to mind, where you're getting an understanding for the actual property itself, get an understanding for how to value the property, and then go ahead and now start facilitating the sale and the leasing.
Yeah, and as a valuer, you're often looking backwards. You have to look forwards, but you're supporting yourself with evidence that's in the past, and then to move on to the coalface and be dealing with buyers and tenants every day. It's pretty cool.
A huge transaction as well, right? Like your team, from my understanding, ranges from like $1 million transaction to 35 mil, 40 mil transaction.
Yeah, absolutely. And it's like it's all different types of asset size, but all different types of buyers as well, from mums and dads who you kind of have to help, you want to help through the whole process, both on the buy and the sell side. And then institutional owners who know, everything. They've got so much data and, they're all over it.
Do you have a certain type of buyer that you see at each price point? And how do you find them? Are they generally local based buyers, especially if they're mums and dads? or is it national or international type buyers?
It depends on the asset. Like, in that top bracket where it's sort of like 10 to 50 million, you get buyers from international. You get lots of buyers coming out of Asia, coming into Australia because it's safe, and buyers from all over Australia. It doesn't really matter where they are. I think connectivity has helped that. You can see like live up to date from satellites, what's happening in the area, what's happening on your particular property. You can get sort of like Google Drive by, you're so connected. It doesn't really matter anymore where the property is. It all comes down to the sums and whether the return works.
We'll go into the numbers and the unemotional aspect to commercial property. Does it get overwhelming doing a $40 million transaction? Like, it almost becomes monopoly money in a way.
I don't work on many of those, to be honest. That's for my colleagues. I like doing the mum and dad stuff. But yeah, look, every transaction is stressful. Like, whether it's $700,000 or, 50 million, because you're just 100% committed to your client to do whatever you can to get the job done, within reason, obviously. And if it falls over, it's devastating. And often they do. You can't quite meet in the middle, and the bid spreads too far, or you can't get one detail agreed, and it falls down, and then you just go, you go on to the next one. So no matter how many of these I do, like, I still just lie at night just going, gee, I hope this goes through.
It's quite fascinating because you, as I said, you're dealing with big sums of money, but how do you actually bring that transaction together? Is it negotiation skills? Is it having the connection with the buyer and the seller? Yeah. What does that look like?
Yeah, well, really, really, ultimately, what we do is just connect people together. Yeah. You've got your seller, you find your buyer. They come from various different places. They might be an inquiry from another property that you've been trying to sell, or that you've sold. They can come from anywhere. Sometimes people just call up and say, this is what I want. Once you get your buyer, you just need your buyer and your seller, and then you just do whatever you can really to try and make it work. Most people sort of have a value in their mind that they want to achieve, and it generally doesn't go to the market if they're not going to come within a pretty close range of that where you can actually do a deal. So it's all sorts of different things. Negotiation, like it's a moving beast. It's a moving target the whole time.
You must be learning so much from each transaction though.
Absolutely. Yeah, I learn every day. Yeah. It's amazing.
What's the Perth property market look like at the moment for commercial property?
It depends on which part of it. There's so many different parts. Industrial, absolutely pumping. Really short land supply.
In what sort of areas would you be saying for that?
Every area. Yeah. Every area. So owner-occupiers really keen, just super keen to buy land so that they can actually sort of square away, lock away their future business. So they'll buy land and build, or they'll buy an existing property and build, which means that for tenants, really low vacancy, really high cost to lease, hard to get a lease. And then that means for investors, really tough buying because you're kind of being pressed out by these owner-occupiers unless there's a long-term lease in place.
And what's driving that owner-occupied purchase?
Just the economy. The economy is really strong, big tailwinds in the economy, lots of production, probably the cost, I think, over time, the cost of production sort of coming down as well with technology. But then in other markets, like apartment development sites, pretty hard work at the moment. It's hard to get construction pricing sort of favourable. It's pretty hard to unlock the land at a price that works. It's risky taking on the number of apartment sales that you need to achieve. So really, they're kind of at polar opposites of the market. Land subdivisions, flying, but then there's risk of water, sewerage, planning, Fire is a big thing at the moment that people are struggling with. So yeah, that it's every asset class compared to resi. There's so many different asset classes, and they are just so different.
How do you come across all of those and be an expert, or you just really need to be a generalist and kind of move with whatever the transaction is?
Yeah, well, in my space, sitting across a bunch of different assets, you just try and keep up to date. You just have to keep up to date with what's happening in most of those asset classes, and then bits and pieces come in. Like, if someone comes in with something you haven't sold for a while, I'll just bring other people in generally.
I guess that's the beauty of such a large organisation, right?
Yeah, exactly.
You touched on apartments, and I'd love to pick your brain on that, because the cost to build a project or an apartment that size, there's just my understanding is there's very limited margin and there's high risk. And so you're then saying, why would you achieve that? But on the other hand, we've got such a supply issue on the residential face.
Yeah, we do.
That we desperately need that to happen. How do you bridge that gap between being able to make a viable project and then actually deliver on it?
Well, I think ultimately it comes down to, first of all, in an apartment project, you need to buy the land at the right price. Sellers aren't softening in their land price. And then you've got to get a builder who can complete the project for starters and facilitate it. And then you've got to get the sales at the right price. So really, the answer to unlocking those sites, because the land price isn't going backwards, the building price isn't going backwards. So really, you need price elasticity at the end in your end lots. And people probably just need to start, or to unlock it, people need to start paying more for their apartments. So it's a real it's a real circular sort of thing, and you're like, oh, I don't really see any exit point here.
Yeah, and I think that's fascinating you touch on, because looking at apartments and call them the units or apartments or smaller complexes, and it might be worth $700,000, to be able to build that exact same replica would cost you more than $700,000. And so the value of that existing property becomes higher in itself, because you can't build the same thing for the same price. And it is just this vortex of...
Yeah, I think it's definitely changing. And I think also like in the past, I'm sure people have spoken about this on the pod before, apartment living isn't really it's not the West Australian way. But I think that's changing just through the pressure of cost of living and buying property. Apartment living is going to become more and more popular. I can see it in my friends who want to get into the property market, and they buy apartments. And ultimately, you just need a roof over your head. Yeah. So I think it's changing, and I think it's going to we'll see a lot more apartment development into the future. And hopefully planning helps us with that and all sorts of different things. But yeah, it's an interesting change, and I think the next 10 years we're going to see a massive change in the way that we live and are happy to live.
Yeah, the big societal change over time. Where's the market now in terms of that owner-occupied industrial? Like, my understanding is the commercial market in that space is generally a couple of years behind where the resi is. And so are you seeing a really big uplift in that because of the lack of supply?
In the value?
Yeah.
Yeah, massively. That's probably the market where the values have jumped the most. When I was a valuer doing stuff up in Wangara, valuations in Wangara, the land rate might have been like $300 a metre. Now there's sort of evidence, there's transactions going through at like $800-900 a metre. So it's really jumped. But then on the flip side, there are asset classes that haven't jumped so hard. So there's still, people are getting priced out of that particular market in industrial, but then there's a heap of other things. If you're not an owner-occupier, investment-wise, that are available at more sort of competitive rates.
Where do you see some kind of value in that market?
In industrial?
Yeah.
Oh, mate, I don't know. There isn't any. Like, genuinely. I think the only value there probably is for people who can buy their own Englobo development sites and go through some planning and then develop sites. Like from an investment perspective, unless you can get a really big land holding and you can get some value add and that kind of thing. But yeah, most investors that I speak about industrial to just go over east.
Do they?
Yeah.
Where would they be generally going over east?
Brisbane, generally Brisbane, some South Australia.
I guess, like, if we delve deeper into the numbers, what sort of return would you be hoping to achieve that obviously at some point it becomes not viable to invest because you're not going to get the return you want?
Yeah.
What do those sort of numbers look like if you were comparing here to, say, Brisbane?
I think Brisbane's probably fairly comparable. If you're looking at like Melbourne and Sydney, far tighter, higher underlying land value. Tenants can only pay so much. So you're looking at tighter yields. But in Perth, like if you're looking at a medical property, you might be looking sort of like 6 to 6.5% yield for a good quality covenant. Same in the fuel space, retail space as well. So it generally sort of sits between like 6 and 7%. And then if you've got a really blue chip, it might, you're pushing down to what's 5 to 6%, I reckon.
Which is so much more than resi.
Yeah.
It is. It's so much more lucrative from a yield perspective than residential property.
Yeah.
You mentioned fuel stations, childcare. Like, these are really interesting business opportunities. Are they quite frequent in terms of transactions, or are they quite rare? What sort of turnover do you see in those spaces?
Hard to quantify. Yeah, it's actually pretty hard to quantify. You see, like there's a fair bit of turnover. Like the childcare space at the moment, you speak to guys on the ground who really specialise in that space, like the valuers and that kind of thing. They're having trouble keeping up with the number of sales going through.
Really?
Yeah, like every week there's more and more transactions in the childcare space, and that's probably going back to 3 years ago, maybe sort of the end of COVID, that COVID era where that market was pumping. It was the flavour of the month. Everyone's building childcare. The tenants are super keen, and now they're looking to sort of roll them out.
And what, splitting them up? And because I imagine, are they generally owned by families or are they owned by syndicates in that space?
All of the above, really.
Yeah,
you've got like privates, families, you've got syndicates, you've got different sort of financial structures owning them, private equity even. Yeah, all sorts.
Do you ever find a similarity between the types of buyers that you're helping? Like, I'm guessing if you're buying something for 20, 30 million, you've got a fairly high net worth client. Do you find a similarity in that type of buyer in terms of their personality or what they're trying to achieve?
I mean, people buying commercial property, if they're in a family context or individual context, are generally like successful people. They're either, they've either successful or they've got sort of wealth from their family that they're taking on kind of stewardship of. So you're generally talking to people who are pretty sophisticated. But then on the flip side, sometimes people are buying and it's not their area of expertise at all and they've got no idea. So, it's such a mixed bag. There's so many people out there. You just never know what you're going to get.
I think that's the exciting part though, right? If you're dealing with people that are quite sophisticated and they've been successful in their own right, I love dealing with them myself because I genuinely want to know how you got to that position.
Totally.
Because I only really want to listen in terms of advice from people that have done what I want to do. And so I've almost gone, well, if someone's bought multiple $20 million commercial properties, I'd love to know, how did you get to that position?
Yeah.
And I'd love to, like, the journey of that person or those individuals, those families, because a lot of it is generational wealth as well. It must be so interesting to see.
Yeah, it is. I love people. I love seeing people who are like first generation or second generation Australian families, and they might be like a market gardener background, work so hard, and then they're buying commercial property, and sort of diversifying their assets and learning, and that's it's pretty amazing.
Yeah. How important is a lease in commercial real estate?
Critical. That's all the value.
Talk me through it.
When you're buying something or you're selling something, you really want to be selling something that's got a pretty bulletproof lease. Like, that's the best option for a successful sale. You know, your buyers know exactly what they're getting themselves into, because that's really, all of the value. There's underlying value in the land and improvements, but if you're selling it as a leased investment and, it's got a bit of a shonky lease, really, like, it just smashes the value.
You mentioned bulletproof, and obviously you're trying to get the strongest lease possible. How do you know the strength of the lease and the tenant that's holding the lease?
I guess you just look out for those top quality brands, those household names, like a fast food, for example. A fast food lease for 10 years is going to sell on a yield sort of like between 4 and 5% in some instances, or maybe around 5% compared to, your local GP practice, which might be like 6.5%. So it's hard to sort of quantify, but I think the market does that for you. Like, if you put a property on the market and it's got a really good quality tenant that people know, you're going to have maybe 10 bids versus, a local operator of the similar quantum of value, you're going to have maybe 2 bids and softer pricing. So really the market kind of determines who's a good tenant and who's not, which is perfect because that's exactly what you want.
How do you then determine the value of the tenancy? Is it purely a ratio of multiplying the rent by a certain amount? Like, is that really where that value is? Is there a certain multiple you apply to that rent or that lease?
Yeah, it's really just based on what people are going to pay for it, and that's how it just changes over time. Like, it goes up, it goes down. It's really the definition of market value is what someone's going to pay for it in the open market. But to actually have market value, you kind of need 2 other or 3 other people who want to pay the same price. So that's really how it's determined. It's a bit of a moving beast.
And are the leases generally then determined by the square meterage of the premises?
Yeah, that varies. Like, it depends on what it is.
Yeah.
Like, there's different ways of measuring different types of property: gross lettable area, net lettable area, gross lettable area retail. That's a bit of a can of worms. That's for the Property Council of Australia to sort out.
We'll leave it to the experts.
Yeah.
Is there any memory or talk me through a memory of a transaction that sticks out? Like, is there any in particular sale or lease that you've been a part of that really sticks out through the journey?
I did some work for a guy who was a business owner. He was a really, really nice guy and really successful. And this goes back to what you were saying about, it's so cool working with people who are successful in their own right. And I did a leasing deal for him. We had a really sort of, his tenant had vacated, which means you've got the property but you've got no income, which is no good. And it's not where you want to be, because some of these things take, they might take I've still got stuff we're working through from 2 years ago.
Long process.
Yeah, so some of them are some of these deals you try and put together, it can take a long, long time. And this particular guy, he was just unreal to deal with. He was really open in his communication. Like, we went through the process of one tenant who we kind of almost had terms agreed with, and then this other tenant came in, and we were like, oh, look, you should probably, they're a better covenant, it's a risk, but you should probably go with them and see if we can nail that down, and then, you know, hopefully in the background, this other mob's still going to be there when, if this new group doesn't take hold of it. And ultimately, he said, "Yeah, we'll back you in." Agree with that advice, and we went down the track with this new group, and they leased it, and it's like a 10-year lease and a great tenant and a great rent, and yeah, it was a great result. And then, you know, he circled back and he was like, "I want to buy something. Can you help me buy something?" And he's still, you know, he bought something with us and he wants to buy another asset. So that's like, that kind of thing stands out, and that's really like, it's a pretty amazing process, and to have people coming back consistently is pretty cool.
They're real long-term relationships.
Yeah, well, property is a long-term relationship. Like everything takes a long time. It's because it's all about building up trust, and you know, hopefully the aim is you try and become a trusted advisor to these groups. And, you know, you just want to be you're hoping to be the first phone call when they need assistance. That's really how our business works.
Yes, same as mine. And sometimes you're almost saying you can make that decision without me if you want to, but it's endearing that you need me to.
Yeah, it's
as
nice
part
to be a part of it.
Yeah, so I'm glad to be a part of it. As an investor, would you be focusing on residential property or commercial property?
Such a broad question. Yeah, wow, you've bamboozled me.
Good. Because you've been a part of a residential purchase in terms of property, and you're so ingrained in that commercial space. So you must, obviously, the pros and cons of both.
Yeah, I think they're both wicked. The resi market I look at every day, and I just go, "Wow, that's so hot!" Like, it's super hot.
Yeah.
Where are all the properties? Like, if you sell a property, where do you buy one to live in? And where do you lease one to live in? That's a challenge when you're looking at residential property. If you're looking to own it yourself, if you're looking to rent it out, like, there's people competing to live in it. They're going to pay more. Your yield's going to go down because, you know, the market's paying more, and you can only rent for so much. Like, people's budgets only go so high. So that's like, I think there's real opportunity in the resi market. You just have to be super selective with it. And that's what I've tried to do personally. I always just love the value add side of things. And when I look at successful people in the industry that I work in, and people who I want to, you know, be like and emulate, they're always people who are buying assets where there's value add, there's extra land, there's tenants that are under rented. They're buying something and they've got a tenant who can go straight in. Or, you know, there was a wicked example like where a group bought a premises. They actually paid for the tenant to leave and got a new tenant in, and they'll sell it for who knows what, but a massive upside. So just getting creative with stuff like that, I think that's where, in a tight market in resi, that's where the value is. In a tight market in commercial, that's where the value is. So whether I would choose one or the other, I'd like to play in both.
Yeah, and I'm just also intrigued about the entry point within commercial. So resi, you could theoretically buy an apartment somewhere for $300,000 to $400,000, and as a minimum contribution, you're looking at $30,000 to $40,000 to get into that market. Whereas commercial, your entry point will be a little bit higher because you're going to struggle to find that, but your contribution or your deposit has to be higher as well.
Yeah.
And so where do you find that entry level for families within the commercial space?
I sort of see the minimum as like maybe 600,000, 500,000 generally in the stuff that I work in. And of course it goes lower. But yeah, if you're tying up a lot of equity into an asset that might not be, particularly in that smaller price point, might not be very liquid.
Yeah.
At the end of the day. So yeah, it's an interesting one. Like, if you're in the market with a smaller budget, I still reckon you're probably best to look in the resi space.
Yeah. And are you seeing more transactions through self-managed super funds over the last 24 months, or is it still just very much the same type of entities buying?
I think it's the same. Yeah, I think it's the same. Definitely groups buying into this super fund, but probably no more than there historically has been.
Yeah, because when you're in an echo chamber of property and investing, it feels like right now everyone's talking about trust lending in terms of residential space. People are talking about if you're capped out in your own borrowing, maybe buy through a super fund. This isn't advice. It's what some people are talking about doing. And so when you're seeing all of this and the algorithms are working the way they are, you feel like everybody's doing it that way. But the reality is maybe nothing's changed.
Yeah, I wouldn't be able to hang my hat on saying that something's changed. Yeah. And I guess maybe those things come and go, and it's in the news cycle, and there's a bit of a flurry of activity, and then everyone just goes back to normal.
There's a flavour of the month, right?
Yeah.
There is absolutely a flavour of the month.
Yeah.
And right now it's Darwin in terms of property market, both residential and commercial.
Really? It's a flying?
Yeah, absolutely. You've got this market that similar to that Armadale price point in Perth, where you've got a house that's worth $400,000. Anyone on the East Coast especially, there's nothing you can buy for $400,000, especially a house with land.
Yeah.
And so you've got a group of buyers agents that would go to an area and almost buy it up like they did for Armadale and the surrounding suburbs here.
Yeah.
They've done the same thing in Darwin, much shorter supply, and all of a sudden, short supply, more demand, naturally increases price. And so that $400,000 house in Darwin is now probably worth $450 to $500.
Isn't that amazing?
In the space of 12 to 18 months.
Yeah.
Is it sustainable? No, you can't grow at that speed constantly, but it does show the power of, firstly, buyers agents, and secondly, people on the East Coast, in majority Sydney, because they can't buy within 50 Ks of the CBD.
Yeah.
And so it's just fascinating to see where people are.
Do you reckon the heat from that perspective's come out of the Perth market and they've gone elsewhere?
Possibly.
Yeah.
There's definitely a thought around that, because the yield, as you mentioned this exact point, as soon as the property value increases too much, the rent hasn't increased to that same amount.
People can only pay so much.
They can only pay so much. And if you're looking at a 4% return, but now in some parts of Perth you're looking at a 3% return, well, maybe buying here might not suit what you're trying to do, but there's still growth as well. So are you buying for growth or are you buying for yield?
Yeah.
Depends on your strategy, right?
Totally.
And I think that's the best part about doing the pod, honestly, is talking to people like yourself in different areas within property, and then sort of pulling together all the different bits of information.
Yeah.
It's
there's so much out there.
Yeah.
And there's so much that, lots of people focus their primary asset is generally their home. And then if you can build it up to the point where you can buy commercial, that's great. But lots of people just stay in the resi space. Like, there's so much out there. There's so much opportunity out there.
There's so much opportunity, but there's also a layer of stay within your own journey, stay within your own race. You see so much and you go, oh, now I want 5 properties. But do you really want to be a landlord to 4 other properties? Maybe not. Yeah. Like, do you have young kids, and is this now too stressful for what you're trying to achieve? Maybe you do it a bit later in life. Like, everyone's running their own race, and I feel that sometimes you kind of get caught up in the swell of, you must do this.
Yeah, definitely.
Do you really need to? I don't know. I've loved this. There's so much value in commercial property, and I would love to learn more, and no doubt you can share more. My favourite part about this is finishing off around what we're proud of. And I feel we don't talk about this enough because of tall poppy syndrome, but I feel it's so important that we do, because we all have achieved something in life and it's worth talking about it. What are you most proud of personally and professionally?
I think what I'm probably most proud of personally is I've just got a great group of mates, like really close, like broad group of mates. I just went on a surf trip with 11 of them for 10 days over to Sumatra. So that's probably what I'm proudest of personally. And then professionally, mate, who knows? I've got to this point in the journey. There's plenty more to go.
So much runway.
It's pretty cool to have got to the point where I'm at personally in my career. But yeah, it's only just beginning.
Where do you sort of see Lachlan Andrew in 10 years' time? What does that look like?
Just adding value.
Adding value in property, adding value as a professional.
Yeah, well, hopefully just doing whatever I'm doing. It'll always be in property, I think. I think I'm probably lucky to have a hobby. Like, it's really a hobby. And then it's just what I'm also good at and how I earn a crust as well. So hopefully it's just doing that and helping lots of people out.
Yeah, it's a cool journey. I can't wait to see what that looks like, because I know that you'll succeed in it, and I can't wait to see whatever that is, and it's going to be cool to watch. Thanks so much for coming in.
My pleasure. Thanks for having me.
It's so nice to have you in. I've really enjoyed the relationship we've built over the last few years. So thanks for coming in.
Thanks for your help as well on the journey.
My pleasure. Cheers, mate. Thank you so much for listening. It's amazing to have you as part of this community for That Backyard Property Pod. Remember, please hit like, subscribe, follow, and send through any questions that you have. We cannot wait to see you again next Tuesday. If you can't wait though, remember we have minis that come out every Thursday, which go into a little bit more depth into the lending and mortgage world. Thanks again, and can't wait to see you again.